Okay, where does the market go next? This is going to be pretty darn specific, so get ready. First, if you've been keeping track of my other videos, and make sure to subscribe, just put it out there, you'll know that I said that the 19th would be the peak, and it would be around the 1364 level, and then after that, we would hit the third wave of a downward correction in a larger bear market. So I'm going to give you a couple choices. This is how the bear market can play out. We can have a correction like this, where it's 3 down and then 3 up and then 5 down. We can have that, or we can have a correction where it's 3 down and then 3 up, but then we make new highs, and then 5 down, which makes really low lows. Or we can have 5, there we go, delete. Or we can have 5 waves down, which would be a very fast bear market. 5 waves down, 3 waves up, and then another 5 waves down. If you don't get what I'm doing, look up Elliott wave analysis. Okay, so the best case scenario right now. I'm going to talk about that in terms of the broad market. The best case scenario at this point would be that we are in a wave A, which looks like this, which means that we would expect 3 waves down, 3 waves up, and then 5 waves down. And once again, very best case scenario, we would not be in a massive bear market. It would just be a typical bear market. So here's the targets right now. If we say that this is going to be a 3-wave decline, first what we're going to want to do is we're going to want to take the height of, and actually let's just use the S&P for now. We are going to want to take the height of this entire movement right here. So from very top to the very bottom. So we have that, and then we're going to take that exact bracket that we just got and then copy paste it. So this is the best case scenario. If I zoom in right here, it says that the market will get down to 1210. So that's the very best case scenario, and then it will correct upwards. Now, where's the time target on that? Time target, I have 2 different Fibonacci levels in July. So if I do my my Fibonacci bracket, which I'm quite a fan of, from the very top, you see that these 2 lines line up right next to each other. And if I actually go to the exact top, they are literally right on top of each other. We have, oh wait, never mind, this July. They are literally on top of each other right here. So we have a July 16th date for a possible pivot point. So that's the best case scenario. What is more likely, wave Cs are normally stronger. So what is more likely is that the market gets down to about 1170. Okay, so I did the 161.8 retracement. Corresponding to the Russell 2000, I take the height of the entire up wave and I project it from the top, and we have 2 targets. The best case scenario would be about 670. The more likely scenario would be about 600. So any way that you make this, market's in for some trouble coming up. Okay, so take a look. First I want to, one last thing I want to take a look at, and that is the, we'll just use the futures. I want to look at cycles. So with the S&P 500, I had that cycle bracket that said that we would be hitting a bottom around like July 17th, July 18th-ish. If I go into the futures market, let's see if we can actually take a look at some cycles. So I already have established that there is a pretty defined 38-day cycle in the market. And as you see, it gets a little closer. We keep moving off just a little bit. So we keep moving off, And so what I'm going to do is I'm going to take this, I'm going to fit it to what I have with the data at this point. So we could say that, actually I'm going to quickly see which cycle works. Hang on just a second. Okay, so I have identified a cycle that lasts, let's see, how many days does this last? A 30-day cycle, so 30 trading days. And if I take this and I zoom it forward, we can actually see where this cycle is expected to bottom. As you see, it's pretty much identified almost every peak, and then it starts to run off as we get closer backwards, and that's perfectly normal. So we have a 30-day cycle now. It used to be 38. I used the 38 in 2011, but now it's 30. Okay, so where does this actually tell us we're going to bottom out? If I take the time axis, expand it, it says that we are going to bottom out, would you look at that, July 16th. Okay, so we have a Fibonacci bracket that says we're going to get a reversal around this July 18th area. We have a cycle bottom around July 16th, so whatever downwave we're in right now, I expect it to end there. But the major pivot I expect to happen a little bit later, perhaps in August or September, and then we'll be in corrective up mode. But till then, keep your shorts strong, because this market isn't really going to end soon. Okay? No buying.